said it would happen a few months ago, and it happened. $1,300 gold today, and Bob Chapman is rarely wrong. He hedged his bet, though, last week. He said it'll probably back off. He said it might hit 1,300, but then back off. We'll see in the next hour if he's right about that. Like, what is gold right now? But Bob Chapman certainly called it. Max Kaiser was on, what was it, a few days ago, and he said we're in a bear market for gold. Only 1% are actually buying gold right now, of yuppies, of the general public. Institutions, banks are hoarding it, buying it up. But once 2, 3, 4% start buying it, which is beginning, some analysts on MSNBC are talking about, and CNBC, $11,000 an ounce gold. But I'll take $1,300. Of course, for inflation, it should be $25 or more $100 an ounce for 1980 numbers. But Bob of the internationalforecaster.com, you've been proven right yet again.
Well, I thank you, and it's nice being that way. And I have a very strong hand in my shoulder, evidently, and I'm appreciative of that. Today, we fiddled around close to the 1,300 area, although October is still trading. And the spot market, I think, was up close to $4. So that puts it around $12.95. And it's very surprising that we would get this kind of result. And the reason why is that normally this week, Wednesday, Thursday, Friday, and then Monday, gold should have been backing off, and the reason why is that on Monday it's gold and silver option expiration. And at 1,300 or higher, there's 46,000 contracts that are in the money. And if gold on Monday closes above 1,300, there's going to be billions of dollars lost by the commercials on COMEX, who happen to be big banks.
So we could see some real fireworks next week.
We certainly could, and the gold is telling us that it's going higher, even with all the selling that's going on by the commercials, who have record positions in the short side net in gold and silver bullion, as well as the shares. And so I think what we're going to see here is a good chance of it closing over 1,300, and if that happens, there'll be big losses. And then I think gold and silver will take off.
Now,
and go higher.
Bob, I interrupted you there when you talked about who is going to be short, who's going to be in trouble next Monday if it closes above or right at 1,300, and you were saying the big mega banks that have been trying to suppress it.
That's right. Now, how much trouble on a net basis spread out among the firms, remains to be seen. But the players are the big ones: J.P. Morgan Chase, Goldman Sachs, Citigroup, Deutsche Bank, HSBC, and there's others, but they're the biggies. And they probably have the largest net short positions, and they will lose the most amount of money on those long gold and silver options. Silver has been trading quite strongly today. Early this morning, around 4 o'clock, it was up 16 cents, and recently it was up 19. So it held its gains all day, which again is surprising, but it's terrific, especially if you have been buying gold and silver coins or bullion from Midas.
Well, stay there. We got to go to break, Bob Chapman. We'll find out why this happened. Obviously, you said that last week. If on Monday and Tuesday the Federal Reserve announces they're going to start monetizing more debt, more quantitative easing, that this was going to happen. They did do that. What does that mean for the overall economy? We know what's happening with commodities like gold, but what does this mean overall? For me, it means an acceleration of implosion. Stay with us. I know our audience is very sophisticated, Bob Chapman, but we're on so many AM and FM affiliates and have new listeners. They're like, why should I care about gold? Or why should I care if the dollar's devalued? Or why should I care if the stock market plunges? Well, if the stock market plunges, that then destroys a lot of companies that employ Americans. If gold's going up, it means the dollar's being devalued, and there's monetization of debt going on, the same thing that happened in the Weimar Republic, Mexico, Argentina, I mean, the list goes on, Nigeria, Zimbabwe. I mean, this is a big deal that they've openly, Congress has admitted, tried to suppress the price of gold, the big central banks, and they're failing. And now that it's touched 1,300 an ounce this morning, you know, even though the big banks were betting against gold and trying to push it down, they're failing. What does this overall signify in the economy, and where do you see gold going? And I'll ask the same question that Bloomberg put out a month ago, that the majority of the futures on gold in the U.S. in the month of December at $1,500 or more. I mean, why would they be betting on $1,500 in December if it's not going to go there?
Well, they think it's going there, and that's why they are. And if you look at the gold long option positions, there's 46,000 contracts that would be in the money, so to speak, on Monday if gold closes above 1,300. And I would guess that part of those contracts that were purchased by people who are long gold bullion. And it's my suspicion that they're going to try to kick it over 1,300 so they'll be able to collect on their bet. And, of course, the commercials are fighting back as hard as they can, but it's not working.
Okay, but for new listeners, explain what short and long means. Explain this.
Short is when you bet something is going down, whether it's gold or silver or the market or a particular stock. When you're long, you are betting that the security of the gold or the commodity is going up. And so what the commercials, which are the banks, on COMEX do is they will sell long contracts to other people, and they will try to continue to suppress the price, in this case of gold, so that it doesn't go over 1,300. Because of the 46,000 contracts, about 25,000 of them are at 1,300 or higher. And this is why there's this titanic battle going on right now. It'll be over on Monday, but the price of gold and silver both are showing that they want to go higher. And, of course, this is terrifying the commercials because they're representing the United States government, who are actively and have been actively suppressing the price of gold and silver for a long, long time, like back to 1988. And so this is a big event. And once it breaks out, which I believe it will, silver could go to $30 pretty easily because there's a monstrous short position in silver by J.P. Morgan Chase and HSBC, which makes up about 42% of the net shorts. And also in the price in the futures of gold and silver, they're very prominent as well, and they continue or have continued for the past several weeks to increase their net short position. And so if gold breaks out over 1,300 and silver continues upward, there's going to be short covering, meaning that they have to buy back what they sold. And when they do that, they make the price go higher. So silver could go to $30 in the next several weeks, and gold could go to 1,500. And that's why you see the December contracts at 1,500 are loaded up, because there's a lot of people out there, and most of these people who are in that market are professionals on the long side, and the banks are on the short side. And they think it's going there, and I do too. I mean, if you go back to 1980 and you use the formula used by the U.S. government for inflation, gold should be selling close to $2,400 an ounce. If you use real inflation without the government bogus figures that they've been putting out since then, you've got $7,700 an ounce. I mean, this is fundamentals. I mean, this is not something we're guessing about. This is a reflection of what really has gone on. So gold and silver are going to go higher. We went long in June of 2000, and gold was about $260. Coins were selling for somewhere in the vicinity of $270 a piece, and now they're selling for over $1,200. Stocks that we had people purchase were selling at 85 cents and $4 and $5. Now they're at 20 and 45 and $70 a share. And we don't encourage people to trade. You're in a trend. You go with the trend. It's your friend. The biggest bull market in history is right before our eyes. Massive amounts of money being made in the gold and silver related asset market. And this is only the end of phase one. We've got phases 2, 3, and 4 to go. These are waves that are coming. And so people should be in there, and they should be out of the stock market in general, except for gold and silver shares. And bonds, the bond market is a bubble. When it's going to break, I don't know, but somewhere along the way, it is.
Now, what does that signify overall about the health of the economy? We saw on Monday, Bob, the federal government came out and said that the recession, this is a good joke, ended in June of last year, so 15 months ago, when every major economic indicator the Fed's put out, which are Cook themselves, shows we're in a deep ongoing recession. And most analysts, even mainline analysts, are saying we're going into a depression.
Well, it just shows you how evil they are and how badly construed the propaganda is and how blatant they are in what they do. Desperate people do desperate things. And they are in serious trouble because there's no way back. After June of 2003, the die was cast. There was no turning back for the people who were involved in bringing the markets down and doing what they did within the economy with real estate that really kicked this thing off. And so what can we expect? We can expect inflation will be higher. We can also expect that it could turn over the next 2 or 3 years into hyperinflation, maybe even quicker than that. And we also can expect that the economy, and this is the question really that you asked, the economy, even if they inject another $2.5 trillion, including any legislative stimulus, like they did in the last 17 months, the best they can do is grow GDP by 1%, and it may be worse than that. And so what are we looking at? We're looking at a sideways movement that's not going to improve employment. You should see the letters I get from people. They're heartbreaking. I just got one from Ontario. The man's been out of work for 7 years because his job was outsourced to China. And he was in the automobile industry. And it goes on and on and on. I mean, people who have worked all their lives, who are retired, they don't have anything. Can you lend me some money? I can't pay my bills. I can't even shop for groceries. And this is only the beginning of this nasty disaster. Can you imagine when it's going to be like a year or two from now? And so it's not good.
Well, they're just going to come on a year.
It was wrong.
Well, they're going to come out in a year or two and just tell us the economy's wonderful. We could all be homeless in the streets like the Great Depression. They'll say it's great.
Well, if you look at the homeless centers, and if you look at the centers where they give out free food, people are lining up at midnight and 2 in the morning to be there when they open at 9 o'clock. I just put a link into the forecaster for tomorrow where I viewed these people, and the galaxy people just like you and I, normal, everyday, hardworking people who lost their jobs or retired or they're ill, and they don't have anything. I mean, what is it going to be like 2 years from now? Never mind more, 4 or 5 years from now. It's going to be awful. And they're not doing anything to fix it. They're just throwing money at it, and most of the money is being thrown into the hands of Wall Street and banking.
And it's just getting worse and worse and worse by the minute. Bob, I want to go to break, and I want to later get into some other news and get your take on it, dealing with the economy and some geopolitical developments.